Good morning, traders. I hope you all had a fantastic weekend. My name's Aaron Hill, and welcome to another segment of Technical Talk. So today is Monday, the 25th of April, and time is now 8:30 a.m. GMT +1. So look, it's been a somewhat energetic start to the week. I think we can all agree. Now, Asia Pac markets, as you can see on the screen, ended the session firmly on the back foot. Japan's Nikkei 225 ended lower by 1.9%. South Korea's Kospi also tumbled 1.8%. Now, Australian markets are actually closed in observance of Anzac Day. So look, we're clearly entrenched in a risk-off scenario amid the overnight risk aversion. This morning, we also see the U.S. equity index futures, U.S. equity index futures lower across the board. As you can see, the Dow Jones, S&P 500, and NASDAQ 100 futures are lower currently, with the Dow Jones down by 0.6%, the S&P down by 0.6%, and the NASDAQ 100 futures down by 0.5%. In terms of European equity cash markets, we're also, as you can see, we are considerably lower across the board. The FTSE 100 is down by 1.6% in early trading. The Germany's DAX 40 is down by 1%. France's CAC 40 is down by 1.4%, and the Euro Stoxx 50, as you can see, is down by 1.3%. Now, risk appetite has clearly taken a hit this morning. Look, on the back of concerns regarding the spread of COVID-19 in China, who are adopting a zero COVID approach. According to a recent Bloomberg report I read, that some residents were even being fenced in certain areas. Ultimately, this is, of course, is stoking concerns of an unprecedented lockdown in the capital, Beijing. This has seen as you can see on the screen, this has seen the Australian dollar and the New Zealand dollar tank in early trading. As you can see we have the Aussie dollar down by 1%, the Aussie dollar against the Swiss franc down by 0.9%, the Aussie dollar against the Japanese yen down by 1.4%. Now, just across on the New Zealand dollar markets, as you can see, we are lower, mostly lower. In early trading, we have the New Zealand dollar against the Japanese yen down by 1.1%. We also have the New Zealand dollar against the US dollar down by 0.8%. While, of course, the US dollar index, I'll show a chart of that very shortly, is underpinned on the back of a safe haven bid. Note that this index just refreshed year-to-date tops. I think it was around 101.70-ish. As I said, I'll click over to a chart shortly on that. Now, in terms of, just really quickly, in terms of earnings, we have a very, very busy week ahead. Coca-Cola is up, as you can see here. Coca-Cola is up. Is up before the open pre-market trading today. On Tuesday, we have, after the close, we have Microsoft and Alphabet. Wednesday, of course, Meta Platforms after the close, along with PayPal and Ford. Now, on Thursday, pre-market trading will see Twitter's earnings released, but after the close, we also have Apple and Amazon taking to the stage. Now, just quickly switching back to the economic calendar. Now, this week we do have, it's a relatively thin calendar, to be quite fair. Today, as you can see, within 26 minutes, we have the German IFO business climate, which tends to affect the euro-based currency pairs. Then in terms of Monday, that's all we really have to really get excited about. We do have the Bank of Canada Governor Macklem speaking at 4 p.m. These are, as you can see up here, guys, GMT +1. So at 4 p.m, BOC Governor Macklem speaks. This could be something to watch for the CAD-based pairs. Now, on Tuesday, we do have US durable goods at 1:30 p.m. And also the core reading. month on month, that is. We also have USCB consumer confidence at 3 p.m., something to look out for, of course. And we also have housing data for the US at also at 3 p.m. Now, in terms of Wednesday, the main event is the Australian CPI figures. This is I believe it's the trimmed mean for one of the events, and the CPI for the year-on-year value. Now, we also just as another highlight, we also have pending home sales for the US taking place, and also ECB President Lagarde speaking at 5 p.m. Now, on Thursday, we do have retail sales for the Australian dollar early trade at 2:30 a.m. This is certainly something to look out for. Also, with a tentative time scale, we have the BOG monetary policy statement, outlook report, and interest rate decision, as well as the press conference. So these are all events we should be closely watching. Also, in terms of the US, we have the GDP quarterly release at 1:30 p.m. along with the initial jobless claims, again out of the US at 1:30 p.m. Now, Friday, we don't really have much to get really excited about. We do have the US core PCE price index, and that comes in at 1:30 p.m. We also have the GDP month over month for Canada at also at 1:30 p.m. and the Michigan consumer sentiment, University of Michigan consumer sentiment at 3 p.m. on Friday. Now, if I just switch things quickly over to the charts. Now, this is not the usual chart I show during the technical talks, but this is a chart I really liked at the close and thought it was worth highlighting. And this, as you can see, is a combination of the S&P 500 on the daily time frame and the CBOE's VIX on the daily time frame. Now, the VIX communicates, just a quick bit of a background on the VIX. The VIX communicates the 30-day implied volatility of the S&P 500 based on S&P 500 options. Now, bear in mind that this value here is an annualized implied 30-day volatility value for the S&P 500. So just to be clear, that this is an annualized number, and that's the annualized that's the implied percentage move over the next 12 months. So how do we arrive at the 30-day implied volatility? Well, a little bit of math here. We do this by first dividing 12. We first find the square root of 12 because there's 12 months in a year, and that and with that we get around 3.64. So then we simply divide the VIX annual number, as you can see here, it's 29.68. by 3.64 to get an implied 30-day move. If you want the daily implied percentage move, the same process applies. Just instead, we find the square root of 252, the number of trading days within the year, and divide this value by the current VIX value. Now, look, ultimately, what I'm looking for on this with these combination of charts is for the VIX to actually close below the upper the upper standard deviation limit from the Bollinger Band. So I'm looking for simultaneously, I'm also looking for price to establish some support around this Quasimodo support at 4224 and an AB equals CD, which is marked by 100% Fibonacci projection at 4251. Now, this combination, along with this, could prove a solid support in the upcoming trade. This is because, look, I am using these bands as, in this case, as an overbought indicator and relying on the concept of mean reversion. Now, mean reversion assumes that if price deviates substantially from the mean price, which in this case is the 20-day simple moving average, it eventually reverts back to the mean price. Of course, like all technical indicators, there is no guarantee, but given the history of this setup, which I've marked with the red boxes, it is considered high probability. As you can see, I'm just going to show an example of this where it played out. So at this point here, around the 6th of December of 2021, we closed above the two standard deviation limits of the Bollinger Band and closed back below this limit. But we also found at that time, we also found a bottom within the S&P 500. Again, at this point here, as you can see, we closed above the second standard deviation, and then we closed back below it, and then formed a bottom on the S&P 500 to subsequently form a nice solid up move. Now, I'm hoping we may eventually see some support coming around this point, but you never know. The VIX could potentially stretch much higher than this, so we have to be prepared for that and be prepared for a bit of a mess around this support. So just do bear that in mind. Now, in terms of the euro, we did see a look. It's gone absolutely berserk in recent hours on the euro. We have seen a considerable drop of around 0.6% in the last hour. Look, but ultimately, we did see a minor gap early trade, largely, I believe, after the French President Emmanuel Macron won a second term in office after defeating his far right rival Marine Le Pen in Sunday's runoff. Now, in terms of the overall technical approach here, look, this is the weekly time frame. This is the daily time frame. For anyone that read my weekly technical market insight, I noted that there is a clear downtrend on the weekly time frame, together with lackluster bullish interest off of the quasi-minor support at 0.778 and channel support. Now, as you can see, in recent trade, we have popped lower. We are moving lower, and this was expected, but I didn't expect it quite so early, to be quite fair. Look, adding to this bearish presence on the weekly time frame, on the daily time frame, we had the euro. We had a shooting star. Let me just zoom into that. We had a shooting star. Almost a picture-perfect shooting star candlestick formed on Thursday. Now, this was around an ascending support. Now, let me just zoom out. Let me just align the charts there. As you can see, we did have an ascending support come in at this point here, with a minor reaction at this point here. But, you know, coupled with the minor reaction from this point here, alongside the shooting star candlestick formation, as well as the lackluster bullish interest from the weekly time frame, on top of the weekly time frames clear-cut downtrend, I did think that look, we are likely heading for pandemic lows of around 0.638 potentially this week. But as you can see, we are now lower by 0.6% in early trading. Now, in terms of the RSI, as you can see, we do remain below the 50 center line, following an attempt to hold above this center line in late March. Now, what this tells us is we clearly have negative momentum on this time frame in the form of average losses exceeding average gains. Now, should we reach the oversold territory, do be aware we have support around 21.87 to be aware of. So do keep that in mind should we continue to push lower. Now, in terms of the lower time frames, the shorter term time periods, I did note in the weekly report the medium term's downside bias from the higher time frames suggests that the currency pair may pursue levels beyond the H1 and H4 quasi-minor supports at 0.769 and 0.758. As you can see, this has occurred, and should H1 maintain its position below 108, we could be reaching support at H1 support at 0.727, 0.7. As you can see, this has occurred. I didn't expect it to occur quite so soon, but it has occurred. So, but look, overall, I do anticipate further selling on the euro. As you can see, we are now below this support on the H4 at 0.758, with room to move lower to around 0.655 on the H4. Also with room to move lower on the daily time frame, and with little, you know, we could say the weekly channel support may stop price, may attempt to draw in buyers. But look, overall, I believe the odds the scale is tipped in favor of sellers for the euro right now. Now, in terms of the Aussie dollar, as I said recently, we have seen the Aussie dollar punch lower. We are down by 1% at the moment. Look, in terms of the Aussie dollar, I think, this is largely affected by the concerns over the COVID spread in China to Beijing and an increasingly hawkish Fed. So the negative market sentiment has also improved the safe haven dollar, as I said, and also with Australia closed this week, light trading has also probably exaggerated the downfall in the Aussie. So look, in terms of where I left off from the weekly market technical briefing, I did say that although weekly price could observe attempts to defend this prime support at on a weekly time frame at 69.48, 72.42, the trend in its overall market does point to lower prices. Consequently, we may see this area's limit challenged this week. If daily price overthrows this support, now this support comes in at 71.65. I see very little in terms of active demand or active support within this area, highlighted by this blue arc. So should we close below this support on a daily time frame, this indicates that we may be shaking hands with this familiar decision point at 69, 64, 70, 40. Interestingly, this decision point is housed within the lower limits of this prime support. So this could effectively be the last line of defense for this prime support on the weekly time frame. Now, clearance of this H4 Quasimodo support at 72.46 on the H4 time frame, I did say would provide an early cue that this market may seek lower prices. Obviously, as I said, I didn't expect it to come quite so soon. But look, we have broken below this Quasimodo support, and we are now testing an interesting area of support. As you can see, we have a 100% Fibonacci projection at 0.7143 and 0.7153. Now, what this is an AB equals CD formation. The 100% Fibonacci projection highlights this, but we also have a 261.8% Fibonacci extension. Now, for anyone that's familiar with Scott Carney's work in regards to harmonics, this is simply the extension there from point B to point C. So we have an A, B, C, D pattern. Point B to point C enables us to apply a Fibonacci extension at 71.53. And as you can see, price is bouncing from this level as we speak. Now, if we do overwhelm this in intraday support, if you will, I am then looking at this Quasimodo support at 71.09. That's accompanied by a 78.6% Fibonacci retracement at 71. Let me just zoom in so I'll make sure I get the correct 71. 71.17. So do be aware of that if we break below this H4 Fibonacci area. Now, in terms of the dollar yen, really my main focus is on the weekly time frame, daily time frame, and H1 time frame. So with the weekly time frame, I do not anticipate much. There's very little resistance I see in this market, technical resistance until the 28th of January high of 2002. And this comes in at 135.16. Right, so with that being said, we also have a pennant formation forming on the daily time frame. As you can see, we have a clear-cut pennant formation with a steep up move. Now, the steep up move is one of the requirements for a pennant formation to form. Now, a pennant formation is generally viewed as a continuation pattern. Now, should we view a decisive breakout to the upside of this pennant formation, now, what this does is it automatically confirms that we are bullish on the higher time frames. Now, if the breakout attacks this supply at 130.65, 129.57, and even if it engulfs this supply, this is a strong sign that the bulls remain in the driving seat and are looking to potentially push much higher in this market. Now, do bear in mind a take profit target for a pennant formation can be drawn from the origin of the pole, if you will, which is around this point here, and taken to the extreme of the pennant's upper limit. And then we can extend that from the breakout value. So that would probably land pretty close to the 28th of January high of 2002. Now, in terms of the short-term time frames, I am looking at this trend line support, as you can see here. This is the H1 time frame, just as a reminder, and we are now testing the 128 figure. I did note in my technical market briefing for the week ahead that I would consider this a dip buying scenario, a dip buying, an area that dip buying strategies may be attracted to. As you can see, we have the 28 figure intersecting with trend line support, along with a 38.2% Fibonacci retracement, as well as a 50% retracement at 127.82. So do bear this in mind. As you can see, we are reacting already, but I do anticipate a whipsaw below this round number to potentially take out any enthusiastic stops, if you will, to test the supports, the surrounding supports. Now, in terms of the pound, we are lower. We are considerably lower this morning. Look, really, for anyone that's watching, that's watched the previous technical talks, I did note that, given the downtrend we're in, given that we have tested the underside of this weekly prime resistance at 34.73, 32.03, we are very likely going to test this weekly support at 27.19. And as you can see, we are now on the doorstep of this level. So this is a very important support to be aware of. Now, other than this, I do not really see much else going on. I am still very bearish in this market. Look, if we do find some respite and the pound rallies, I believe many traders will be looking at sell-on rally scenarios from the 128 figure on the H1 time frame, targeting 127, which, as you're probably aware, is very close to the 127.19 weekly support level. Now, let me just quickly go over to the Dixie chart. This is the US dollar index, guys. Let me just zoom out, sorry. As you can see, the US dollar index retested the 100 figure last week, the tail end of the week, as well as complemented by an ascending channel resistance turn support. As you can see, we ended the week at the doorstep of this prime resistance at 101.79, 101.04. Guys, just as a reminder, this is the daily time frame. Now, in recent trade, we are up by 0.5%, and we are attacking this prime resistance. With sellers really putting up little fight at the moment. Look, if we do come above this prime resistance, I do anticipate we are likely heading for the resistance around 102.95. But do bear in mind, we are looking like we want to form some sort of bearish divergence on the RSI. But look, I would. Given that the trend is incredibly strong right now, there are a number of false signals that can occur on the RSI. One being is price can remain within the overbought area for a prolonged period. So just bear this in mind for any dollar-based traders. Now, that's a wrap from my side, traders. Thanks so much for taking the time out of your day to join me. Look, questions or comments or suggestions or anything of that nature, please do consider sending us an email at either Markets Analyst at fpmarkets.com, or alternatively, direct them to our support team at support@fpmarkets.com. Thank you very much for your time, and I'll catch you all again next week. Have a fantastic week ahead.